If you're buying a dental practice in the next few months, listen closely, because most dentists do the same thing at first. They fall in love with ownership, they look at collections, they trust the broker packet, they assume if it's busy, I'll be fine. But a busy practice can still leave you broke. A busy practice can still be run poorly, and a busy practice can be a huge headache if you don't set things up correctly before you close. So in this video, I'm going to walk you through the exact 5 things you should be doing before you purchase a dental practice, not after, before. And if we haven't met, my name is Kingsley Ifedi. I'm a dental CPA with a master's in accounting, and I specialize in helping dental practice owners pay less tax legally and increase their take home year after year. Over the last few years, I've advised practices across 41 states, representing well over $300 million in combined collections. So I've seen hundreds of dental practice acquisitions, and I've analyzed hundreds of dental practice financials. So I know exactly what it looks like to change your family's trajectory through practice ownership. And if you stick around to the end, today I'm going to show you exactly what you should do before you purchase a dental practice. But before we hop in, quick disclaimer. Yes, I'm a CPA, but I'm not your CPA unless you hire me. So this is for educational purposes only and is not financial or tax advice. Taxes and finances are highly personal, and your specific facts and circumstances matter. So here's the shift. You're not buying production, you're buying a cash flowing business. So every step I'm about to share is designed to protect cash flow, pay less in taxes, and protect you from the mistakes that cost new owners tens of thousands of dollars. So here are the 5 things right up front. Number 1, create the correct entities and get the right structure. Number 2, talk to a payroll provider early. Number 3, hire a dental CPA, not your office manager and not your uncle. Number 4, open the right bank accounts and track startup expenses. Number 5, understand your deal in terms before you sign. Let's get into it. Number 1 is create entities and get your right structure. See, this isn't sexy, but it is foundational. Before money starts moving, you want the right legal and tax setup. At a minimum, you need 2 entities, one for the practice operations and one for the real estate holding company. Now for the practice operations entity, you should be an LLC, PC, or PLLC, and your tax election depends. Now you might be thinking, should I make the S-Corp tax election? See, S-Corps can be beneficial and they can be ideal, but timing matters more than people realize. See, a lot of people hear S-Corp saves in taxes and they want to flip the switch on day one. But year-one profits are often unpredictable, and you might have transition issues. You might have staffing issues. You might have a big equipment repair. You might need to invest in equipment. You might need to ramp up marketing. You might be still smoothing out cash flow while insurance and collections settle. So sometimes the smartest move is to start as an LLC or PC or PLLC, tax as a sole proprietor in year 1, then elect S-Corp once profitability is stable and we can set up payroll correctly. Now the biggest thing, if you're electing S-Corp status, is understanding that you may not be able to take a loss in year 1. That is due to something called basis. I won't go into it in this video, but just understand it's a thing, and that's why electing S-Corp in year 1 is not always a one size fits all. My rule of thumb is if you are closing in quarter 4, then we're probably going to have a more deeper conversation into if electing S corporation right away is a good idea. Now, if you're buying the building, entities matter even more. The building should almost always go into its own legal entity, completely separate from the practice. And that entity should be an LLC, not an S-Corp. Here's why. Real estate likes flexibility. Real estate has different planning goals than an operating practice, and separation protects you legally. God forbid someone slips and falls on your property, that legal liability protection might be what saves you in the long run. So it looks like this. Your dental practice operates in the practice LLC, could be taxed as an S-Corp, and the building sits in a completely different building holding company LLC. The practice pays rent to the building holding company, and then the building LLC uses that rent to pay the mortgage and other building expenses if necessary. See, what I suggest to keep things super clean and super simple for bookkeeping is that the building entity should simply pay the mortgage and the practice entity should carry most, if not all, of the building's expenses. And you do want a proper lease between your practice entity and your building entity to keep things clean. It's super important that you create a clear rent expense inside the practice and that you have good paper trails to completely separate out liability. This helps you build wealth through the real estate side the right way. And if you ever sell the practice later, you can keep the building as an investment if you want. Now, we won't go too deep into that in this video, but owning the building and paying rent to yourself gives you control over one of your biggest fixed costs, which is powerful long term. So your checklist is here. Set up the LLC or PLLC PC, it depends. Get the EIN, and when it makes sense, file Form 2553 to elect S corporation status. And please don't do this with some random attorney. You want a dental-specific attorney who does transitions all the time. Side note, I have a dental attorney that I trust a ton. I can connect you if you need one. Go ahead and shoot me an email. My email is in the description, and I'll go ahead and make an intro email between you and the attorney. Number 2, talk to a payroll provider early. See, payroll is usually the biggest expense inside of a dental practice. So it's not something you want to wing or wait until the last minute. Payroll impacts cash flow, payroll impacts compliance, and payroll impacts your tax strategy. And it goes without saying, payroll impacts team morale. You don't want to screw this one up. Payroll is at the center of everything you do as a dental practice. A good payroll provider can also help you get the necessary state ID numbers for your state withholdings, for your state unemployment insurance, and so many other necessary state ID numbers, which is a huge help when you're stepping into ownership. So don't wait until the week of closing. I've seen so many people wait too late, and next thing you know, they miss their first payroll cycle. That's not a good way to start practice ownership. So talk to payroll providers during the purchase process. And my general recommendation is to go with a big name with strong support. The two that I typically always recommend are Gusto and ADP. Why? Reliability. Support when something breaks, clean reporting, and yes, fewer mistakes. So most practice owners I work with pay roughly $100 to about $300 per month, depending on headcount and different add-ons for the payroll. Here are a few questions to ask right up front. Do you handle state registrations and payroll tax accounts? How do you handle new hire reporting? Can you integrate with workers' comp? How do you handle PTO, benefits, and other deductions? How easy is it for me to pull payroll reports that actually help me manage my business? Do I have a dedicated payroll rep that I can reach out to if anything breaks? If you set up payroll correctly early, you avoid chaos in month 1. Number 3, hire a dental CPA before you close. See, as a dental CPA, I cannot stress this enough. And I'm going to be very direct. Don't have your office manager doing your accounting. Don't have your uncle doing your accounting. And don't tell yourself that you're just going to DIY and do it yourself. Here's why. Separation of duties. I have seen practices where one person collects payments, one person makes deposits, one person reconciles the bank account, runs payroll, and pays bills. That's a risk, because when one person has full control, money can disappear. And I have seen embezzlement in ways that you can never imagine. Not always, but it can. And in the situations that I've seen embezzlement, it went on for months and even years because there were no controls and no oversight. This is not about assuming that your team is bad. It's about building systems where problems can hide. Also, I believe that your office manager should be focused on the highest ROI work: schedule optimization, collections, patient experience, team performance, reducing no-shows, improving case acceptance, not accounting. So what should a good dental CPA do? At the bare minimum, they should do this: your personal return, your business tax returns. They should send you your monthly financials consistently via email every month, at least by the 12th of the month. And they should have a few dedicated strategy meetings with you throughout the year, where you talk payroll, taxes, profit, and KPIs so that you know exactly how your practice is running. And in terms of cost, a strong dental CPA relationship is typically around $1,500 to $2,500 per month, depending on the scope. Bookkeeping alone is not the goal. You want someone who understands dental metrics and can guide decisions. Always go dental specific, not local and not general, because dental specific CPAs have been there and done that, and they talk to many practice owners in your shoes, and that specific guidance is worth its weight in gold. So here are a few questions to ask when you're interviewing a dental CPA. Number 1, how many practices do you currently serve? Number 2, how fast do you close the books each month? Number 3, what reports do I get and by what day of the month? Like I said, I recommend that the books are closed by the 12th and that you get your monthly financials by the 12th so that you can review your prior month timely and make good decisions in your practice. Number 4, do you track overhead categories like staff, supplies, labs, rent, and marketing? That helps me manage profitably. Do you help owners plan for taxes instead of just filing tax returns? How many strategy meetings do I get each year? And what does success look like in the first 90 days of working together? If they can't answer those clearly, that's probably a red flag. Number 4, open the right bank accounts and track startup expenses. A lot of new owners get too trigger happy and open way too many bank accounts. It feels organized, but it just creates confusion and messy bookkeeping. Here's what I recommend as a starting point for most owners. 1 business checkings account, 1 business savings, and 1 business credit card. 3 accounts. That's it. Because I believe less is better. Simple makes your cash flow visible. Simple books keep your books cleaner, and it gives your dental CPA less accounts to reconcile each month. Simple makes it easier to spot problems early on. Now, during startup, you might pay for things out of your personal bank account for the business before the business has its own bank accounts, right? Think attorney retainers, software subscriptions, supplies, marketing, training, consultants, all of those different expenses that you're putting on your personal card before the business account is open. If you pay personally, don't panic, track it. Always recommend create a simple Excel file with the date, vendor, amount, and a category for what that expense was. What was the business purpose? And whatever the account it was paid out personally. This matters because startup costs are often deductible or handled in a specific way for tax purposes. If you don't track them like this, then you're probably going to lose out on a deduction or misclassify expenses because this is on your personal card and your accountant doesn't have insight on your personal card. So clean accounts and clean tracking equals clean taxes. Number 5, understand your deal before you sign on that dotted line. Because the deal is not just about the purchase price, it's about the deal structure. First, is this an asset sale or is it a stock sale? Most dental practices are asset sales, and that impacts taxes, liability, and what you're actually buying. Second, what's included? Are you buying accounts receivable or are you not? Are you buying inventory? Are you buying equipment? Do you have a full equipment list with age and condition? Are there any major upgrades that you need to make to the equipment from day one? Are there software contracts and subscriptions that transfer? Third, working capital. Some deals do include working capital, and you need to understand what that means and what it does to cash flow on day one. The fourth thing in understanding the deal is purchase price allocation. How much is allocated to equipment versus goodwill? Because that impacts depreciation and tax savings in the first few years. Typically, you want more allocated to tangible assets than intangible assets like goodwill because that's going to give you more options when it comes to tax savings. And finally, transition terms. How long is the seller staying? What happens with the staff? How is the lease handled and what are the renewal options? Are there restrictive covenants or non-competes? You want clarity before you sign because once you close, your leverage is gone. And I learned so much helping my brother purchase his dental practice. I was on his deal team when he closed, and that's what got my feet wet in dental acquisitions and as a dental CPA. And there are so many things that you're doing non-clinically that you have to get ready for, such as switching over passwords, getting access to softwares, accessing the patient list, getting access to the Google My Business, and so many transitional things that you have to be ready for day one. So quick recap, before you buy a dental practice, number 1, create entities and get your structure right. Number 2, talk to a payroll provider early. Number 3, hire a dental-specific CPA. Number 4, open up bank accounts and track startup cost. Number 5, understand your deal terms before you sign. If you want to talk through a personalized tax plan and build a strategy around your income, your goals, your timeline, book an intro call with me and my team using the link in the description. And if you've learned something new today, like, subscribe, and share this with someone working on their own wealth journey. Until then, keep building and keep keeping more of what you earn. I'll see you in the next video.